okay, I want to go all in on crypto. Like, I'm selling a house. It'll be sold in about 2 months. I'm going to take all that money. I'm going to put it into crypto. I said, do not do that. I said, that's a terrible idea, because that time frame is not conducive to the gains of this bull market. It's going to be at the top or near the top or slightly after the top. For people that want to put big chunks in, it's going to be better to wait until next year. This has to lead to a higher plane of consciousness in crypto where you look at the bigger picture, and the bear market is the opportunity for you to do that. So when you hear me say, the new person, they hear me say, could be the worst bear market ever, they hear, oh no, in the short term, we're not going to do great. But the smart investors, the ones that listen, the ones that will change their lives forever, they say, oh, worst bear market ever? Best buying opportunity in history. And I think that's what we're going to see over the next year.
Yeah, last time you were here, the quote I remember the most is, you get rich in the bear markets.
Education, this is what it's about. Find resources where you can find different perspectives. You got to make up your own mind about something. You've got to do your own research, but you have to actually go do the research and listen to different perspectives. Make sure you're not caught in an echo chamber. There's going to be a lot of people out here in this market. They're going to tell you what they want you to hear. It may not be the truth. You know, if you've just got extra money sitting around, then, you know, you still can be up for a 2 or 3X, but the real money, I'm going to say it again, next year in the bear market.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs, sharing our vulnerability, overcoming our fears, transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Ben Armstrong, the broadcaster, investor, and cryptocurrency influencer. You are the founder of the BitBoy Crypto YouTube channel, where you post daily market updates addressing all the latest news to a massive community of crypto enthusiasts. Your aim is to provide education and entertainment in equal measure, and you've amassed the largest following of any crypto platform with over 5 million total subscribers. Last time you were on the show, we talked about the future of Bitcoin, Ethereum 2.0, crypto education, and investment strategies. Today, I want to talk about how to survive the bear market in crypto, geopolitics in Bitcoin, the Cardano upgrade, SEC regulation, and the next big altcoins. Ben, welcome back to London Real.
Well, thanks for having me. Last time we had a really great time, and glad we get to continue the conversation, and glad people still care about crypto a few months later.
Yeah, that's good to see. And I just want to say to everybody here, they need to go subscribe to your channel, BitBoy Crypto, because I love your videos. My students in the academy, they love them too. Again, it's a little bit of P.T. Barnum and a lot of great knowledge, and it's fun to watch you. I like your drives to the church on Sunday, and I don't know, you got a great way about you. So thanks for all the content. All of my people really enjoy it as well. So keep up the good work. I know it's hard producing that much content, but you're good at it, is what I'll say, Ben. So thank you. I appreciate it. And you've also got my students freaked out, Ben. So I got to ask you about this, because inside my academy, I'm getting tons of questions this last week. They say, BitBoy Crypto is telling us the bear market's coming. You talked about, I think, Bitcoin going to 18 to 24,000. Now, I know you were talking next year, but all my students started freaking out and say, what do we do? Do we buy? Do we sell? And I'm glad we're having this conversation, because it happened kind of at a similar time where the market has now tested some lows this week. I know we're back off the lows, but Bitcoin went through 40,000 briefly, Ethereum below 3,000. And everyone's asking me about how we deal with the bear market, whether it's now or in 6 months or 12 months. And Ben, you're really honest about talking about this stuff. You're always about, look, this is going to happen. You've been through these bear markets before and you made it out alive. So let's talk about the bear market first. You have a great quote, if in doubt, zoom out. It's a fantastic way of looking at things. Tell us, is the bear market happening? How do we deal with it?
Yeah, the bear market is definitely going to happen. Now, there's a little bit of confusion this weekend. There was a tweet. I ended up deleting it because it wasn't conveying the proper message that I wanted to convey, which is, we do feel like this market is going to top out soon, but we do believe there is one more parabolic move. And we do think Bitcoin will hit $100,000 in the next couple of months. And then it will go down. Altcoins will move up after that, but Bitcoin will be tumbling. And then next year, Bitcoin is going to tumble greatly. We know this. It's a 4-year cycle for Bitcoin. We've seen it over and over and over again. And there's nothing about this market to indicate anything different. We've already seen in the bull market how quickly things can change. In May, we had a 55% drop in one day. So we do know that this can happen. Other bull markets, we've seen even bigger drops in a day. So to think that we're immune this time because there's more money in or institutions are here, I don't think that that's really a good way of looking at it or a good perspective. The best way for me always is looking at history, and it doesn't always repeat, but it rhymes. That's what, a lot of people say. And I generally agree with that. According to my calculations, I guess, that I've made for 2 years, I said the bull run would end at the end of September in 2021. Now we're getting to the end of September and we've not had that parabolic rise yet. So my timeline may end up being off by 4 or 6 weeks, but I do believe sometime during the fall, we will see the top of the bull market, which the top of the bull market is literally the beginning of the bear market. So, that they go, one right into the next. So how do you survive a bear market? Well, just like you said, when in doubt, zoom out. When you look at the overall trajectory of crypto and of Bitcoin, it's always up and to the right, meaning we expect big growth coming from it. So really and truly, the way to navigate the rest of this bull market, like I have a lot of people that'll come up to me and they'll say, just people in my regular life, like, maybe people at the ballpark or people I see, from church or whatever it might be. They say, okay, I want to go all in on crypto. Like somebody told me, they said, I'm selling a house. It'll be sold in about 2 months. I'm going to take all that money. I'm going to put it into crypto. I said, do not do that. I said, that's a terrible idea because that time frame is not conducive to the gains of this bull market. It's going to be at the top or near the top or slightly after the top. For people that want to put big chunks in, like I'm talking about not necessarily money that you can't not afford to lose, but money that's very significant to you that you want to see a return on. It's going to be better to wait until next year because the percentage gains that we could get from Bitcoin right now, in my opinion, we could see Bitcoin slightly above a 2x, maybe a 2.5x at the most from here, goes somewhere between $100,000 to $120,000. Which I guess $120,000 from 40 would put it at about a 3x. But that's the best that we're going to get, in my opinion. When you look at the bear market after it drops down considerably, your risk versus reward is so much higher than trying to time the market at this point. People that are newer to crypto, it's not a good idea, in my opinion, right now to put a lot of money in because the gains are very short from here. We're only going to have 2 to 3 months at the most of the remainder of this bull run before we go into the bear market. And I believe personally that we are moving from inflation to deflation in the United States. And this is key because one of the things that made this bull run go so parabolic so quickly was the quantitative easing and the money printing in the United States. So as the value of Bitcoin was going up, the value of the dollar was going down. Well, I now believe that starting in the fall with tapering and bond yield returns lowering, that we're going to start seeing deflation while Bitcoin is in a bear market. So you're actually going to see Bitcoin going down. And at the same time, you're going to see the dollar going up in value. And I think it's going to actually make this one of the worst bear markets that we've ever seen because it is having to factor in against that deflation. But people have to hear this. And I know everybody in crypto, you've got the short-term mindset. You want to make as much money that, you're planning on buying a new house next year. You're planning on being able to retire off the money you're making in the next year in crypto or the next 3 months in crypto. Well, that may not be the case for everybody, but the statistics show over a 4-year period in crypto, if you invest, you will make money. And I think that the short-term immature mindset of a lot of newer crypto investors, this has to lead to a higher plane of consciousness in crypto where you look at the bigger picture, and the bear market is the opportunity for you to do that. So when you hear me say, the new person, they hear me say, could be the worst bear market ever, they hear, oh no, in the short term, we're not going to do great. But the smart investors, the ones that listen, the ones that will change their lives forever, they say, oh, worst bear market ever? best buying opportunity in history. And I think that's what we're going to see over the next year.
Yeah, last time you were here, the quote I remember the most is, "You get rich in the bear markets." And that was the quote I went right in to my academy the next day, and I said, this is what he said. And it was a great realization that that's what we're here to do. And it is a long-term play. And the problem, there's a lot of wonderful things about crypto and DeFi. The problem is even that word, HODL, which is something you only see in the crypto space. You don't hear the equity markets, or when I used to trade government bonds, there weren't any HODLers in that market. But by definition in this market, everybody wants to own it and they want it to go up sooner than later. And so nobody wants to hear about bear markets or short selling. Whereas on Wall Street, it's a reality. They've been doing it for 100 years. And the big players, there's a great line on Wall Street. He says, quick buck artists come and go with every bull market. It's the real players make it through the bear markets. That's what one of the old guys says to Bud Fox when he's on the trading floor. And but I guess in this market, a lot of people are new to it and they want to make the fortune, and then they want to find their way to HODL their way through it. So let me ask you this, Ben. The HODLers, which is by definition someone that holds on for dear life, they're going to get punished badly in the bear market because they don't ever get out of positions. So what do you tell them, or what do they do? Just take the pain?
Well, look, I think HODLing is this may sound counterintuitive to what a lot of people are going to tell you, but HODLing is not the optimal strategy. It's a lazy strategy. And if you feel like, and this is where the word came from, a guy said, every time I make a trade, I lose. Literally every time I sell at the wrong time. Now, keep in mind when this was said, I think back in 2012, this was a typo from the word hold, and it was, spelled the word HODL, HODL, and that's where all this comes from. But at that time, there were not educational resources available to everyone. And on top of that, we didn't have content creators out there everywhere giving this message. And you didn't understand, you didn't have the history of 3 to 4 cycles to go off of. You just had one. We've got so much more at our disposal now. In my opinion, there's no excuse for anyone not to be able to sell near the top of the market. It doesn't have to be the exact day, dollar cost average out, but there's no excuse for it. To think about the potential gains you can make in accumulation. I just use this example. I've used this a million times. Very simple to understand. Okay. This is how you can turn $10,000 into over $1 million very easily with crypto. Okay. You bought a Bitcoin for $10,000. Let's say last year. Now the price, we don't think it'll go back to 10,000, but you use this as an example. $10,000, you bought one Bitcoin back in, let's say, September of last year or October, whenever it hit 10,000. One Bitcoin, $10,000. You ride that all the way to the top where we believe it's going to hit $100,000. When Bitcoin hits $100,000, you sell your Bitcoin. You now have $100,000 sitting in your bank or sitting in a stable coin. The price of Bitcoin retraces. Let's just say it retraces 80%. On average, it retraces 85%, but let's just say 80 this time. So it goes from 100,000 back down to 20,000. You've got money sitting in stable coins. You're now able to afford 5 Bitcoin. Okay. Instead of 1, you now have 5. Okay. We believe during the next cycle, there is a huge chance that Bitcoin goes up to $250,000. That would be extreme diminished returns from the last several cycles. But I think we can safely say $250,000 for the next cycle is very achievable. You turn $10,000 into $1.25 million just by that strategy. Meanwhile, if you held and you just held that one Bitcoin, you're looking at, if it drops back down to $20,000, having $20,000. And if it goes up to, $250K, you have $250,000. That's a great return, but you could have 5 times more than that. And we see these opportunities in several coins. It's not just Bitcoin. That's a real easy, tangible one for people to understand. But these opportunities exist everywhere. You have to be willing, in my opinion, to sell tops and buy bottoms. And we're only, as somebody told me, they said, I'm just a hodler. Like, I just don't really know how to time the market. You only have to time it twice every 4 years. That's it. Just time approximately within a couple months of the top and within a couple months of the bottom. And we have a lot of history to suggest when those times will be, and you're going to accumulate way more. We're never selling out of crypto to get out of crypto. We're only selling out of positions to accumulate much more over the long term. It's not like you just say, I'm going to sell the top and be done with crypto. Why would you do that when this is an emerging market? And so that's something I think some people get confused about. We're going to cash out 80% of our crypto And we're going to make massive returns when we accumulate more crypto with those numbers. We diversify some of that money here and there, property, buildings, ballpark, stuff like that. But when it comes to our overall crypto strategy, we're only selling to buy more crypto.
Yeah, great point. I agree. HODLing is lazy. Again, it doesn't exist in any other market for a reason. And you just said get out of maybe 80% of your crypto. So you won't necessarily get out of everything you own when you think you're near the top, but you'll get out of a huge chunk of it. Is that what you're saying?
Yeah. And the reason for that is, at some point in the future, crypto will change and it'll get off of a 4-year cycle. Altcoins will emerge. If you look at Chainlink from the last bear market, it crushed it in the entire bear market and went way up. Like it went up like 100x in the bear market. I don't have that exact number, but something similar to that. So what we're going to be doing is we're going to be selling 80%. Most of the small projects we're going to sell for sure. But, some of the larger ones, your Cardanos, your Ethereums, your Bitcoins, we're going to hold on to 20% in case we're wrong. The upside for us to still have 20%, if let's say it were to go to $300,000 or $400,000, or let's say there is no bear market, we still have a significant amount of exposure. And, if you were to ask me like what the chances are that I feel like that there will be a bear market, I would tell you like 95%. So by holding on to 20%, I think our risk versus reward there is still, still very high. And that way, if we're wrong, or if some coins we're wrong on, we still get the remainder of the pump and things will, continue to go up while we have other things sitting in stable coins.
Yeah, look, I think that's a great strategy. And from all the smart people out there I've spoken to, investors at least, they take a small percentage of their total portfolio, we're talking 10 or 20%, and put it into crypto. And the rest, they keep their house, they keep their other stuff. And then from that, like you said, they go in on the crypto, but they're smart enough to get out of it almost completely in the right markets. But try telling that to somebody new to this, and you tell them, oh, you're excited about crypto? Oh, you're new to crypto? Sell it all. And again, they can't compute. So you get the hodling mentality. You keep people that ride these waves down. And like you said, after this big spike and it comes back down, they're sitting on a 2x move on their Bitcoin from 10 grand to 20 grand when they could be sitting on 5 Bitcoins. So you're right. And again, people shouldn't think that they're ever going to sell the tops or buy the lows. You'll literally go insane trying to do that. If you're 30% off the highs or 30% off the lows, you can still be doing okay. So it's a great philosophy. And I think people should be comfortable holding stablecoin in their accounts, being ready to take advantage of the bear market. I know it's like sitting on your hands. And to a person that's new to the trading environment, it's such an emotional head game that most people won't do it. It takes a lot of discipline, Ben, to follow your advice, right?
Well, it does. And I'm going to say this. I mean, the reason why I can give this advice very easily is because I've done it the wrong way so much. During the last, let me tell you, when I heard people when Bitcoin was still around 14, 15,000 in 2018, when I heard people talking about, oh, Bitcoin has the potential to go down to $3,000. I was like, whatever. That's not, I'm so tired of these haters, these bearish people. They don't know what they're talking about. Bitcoin's here forever. It's going to bounce back any day now, and then we went into a 3-year bear market. So for me, I made decisions based on what we call hopium, based on like, it's going to come right back up. Now, over time, because I continued to buy more crypto and I stayed dedicated on the channel, like things worked out very well for me, obviously. But it would have been very easy for me to just give up and quit when things were pushed down so far because I didn't expect it and I didn't see it coming. And so a lot of my advice to you comes from the things that I wish I had done differently and I had been more open-minded. Because when you first come into crypto, it is such like sensory overload, whether it's information or charts or videos or just understanding decentralization and blockchain for the first time, the technology. It's so sensory overload that like you just feel like it can't ever go down because you watched it go up so fast and so hard. But history shows us it does have these dramatic drops that last over multi years. And I think we're going to see it again. So the advice I'm giving people right now is what I wish I would have listened to 4 years ago.
Yeah, look, great advice. And you've said once, smart money is just dumb money that's been through a crash. And so again, your advice comes from going up and down the pops. And you're right, this market is insane. I mean, I tell my students, it's like you're going into a fun house as a 7-year-old kid and smoking crack at the same time. I mean, there's just so much going on that it's hard not to buy into it, to go down the rabbit holes, to let it affect your DNA. I don't remember any market I've ever traded being this crazy. And again, I can barely keep up with all the things going on. And all of a sudden, AVAX is in one of the top 10 market caps. And like that happened in a few weeks. And and like all these things are happening. I want to talk about those altcoins, but it's good advice. And I really hope that people really think about this and take it, because I agree. I do think we see another move on this. I do think we break those 6 figures, but then there's going to be a time where we see that retracement. And again, you've seen it happen. You know, Max Kaiser talks about how he's seen 3 different 90% retracements in the market. And even always happy and peppy Max said that will kill the spirit. And so you just got to be ready for it. Let me read a few.
It does if you're not expecting it, for sure. If you're not expecting it and you're, you know, fingers, you know, like la la la, I'm not going to listen to anybody bearish. It takes you by such surprise that it crushes you, and that's why a lot of people leave crypto. So you got to understand it is a possibility of happening.
Yeah, and again, hodling's lazy, so get off of it. Again, if it's too complicated not to hodl, drop yourself down to 3 coins, pick them, and then pick a time to sell them, and be comfortable being in cash at 80%. Try being in cash for 80% over the weekend and realize that everything's okay, right? You just try it, getting in and out, and you'll start to get a feel for that. So I think that's really good advice. Let me read something that was said by Gary Gensler, our friend over at the SEC recently, I think even like today or yesterday. He compared the crypto industry to the Wild West, and he said, we've got a lot of casinos here in the Wild West, and the poker chip is these stable coins. We see the SEC and a smart guy, I think he's a fellow MIT grad who used to teach about this stuff, who's now saying things like this. I mean, this is a pretty toxic thing to say about a market that has a lot of depth to it when it comes to development. What do you see when someone like that says that? Is that part posturing, or is that how he really feels? And what does it mean for the market?
No, he doesn't really feel that way. We know in 2018, he did an interview where he said 75% of ICOs, which were, you know, looked at as the bane of the industry at that point, 75% of ICOs were not securities. And now everything's a security a few years later, even though almost all new projects have totally fair launches. They go through DEXs. And for him to say stable coins are securities, I mean, we call him, you know, lizard person or either a Skeletor on my channel. This guy's been through the ringer. You know, he looks like a guy that's had a real hard life for sure if you look at this guy. But I think that he's, you know, everything he says is asinine when it comes to crypto. And no, he doesn't believe anything he's saying. He's a chameleon is what he is. This is a guy that used to work for Goldman Sachs or Fidelity. I can't remember exactly which one it was. I think it was Goldman Sachs. He is an inside man for the banking infrastructure. And what we're seeing right now with a lot of this talk is 2 things. Number one, we are seeing intentional FUD trying to keep crypto down, especially coins like XRP that the SEC is really big on. You know, obviously they got the lawsuit, which I think will be settled soon in favor of, you know, XRP will get a slap on the wrist, or Ripple Labs will get a slap on the wrist. But, you know, he's saying this stuff to try to keep things down while all the banks accumulate. We call it the financial cartel. Your big hedge funds, your Andreessen Horowitzes, your, you know, BlackRocks, your Fidelities, your Goldman Sachs, all these people are in what we call the financial cartel. These are people that move the markets intentionally at their own whims. Very few people understand how this works and know how this works. Gary Gensler is a shill for them. Nothing that he says is honest and nothing can be trusted. The SEC is the most corrupt organization in the United States government, and that's saying a lot. And they work hand in hand. The financial cartel works hand in hand with Coinbase. Suddenly, you know, the SEC is saying we're going to go after Coinbase, and then now Coinbase is getting to go to Washington and tell them how to do crypto regulations because they all work hand in hand. But the other thing about this, it's not just that they're trying to press things down, but when it comes to stablecoins specifically, there's a reason why stablecoins are being targeted. Okay, what is the safest investment that you can make out there? That would be government bonds. Government bonds are the safest investment. They're based on 2 things. They're based on your country still existing and your government still taxing people. As long as those 2 things happen, those bonds are good. They're basically surefire bets for people. The returns are very small. And if you look at what's going on with crypto, with stable coin staking, USDC, Tether, whatever it might be on Celsius, BlockFi, the Coinbase Lend platform that's not going to be coming out, what you're looking at extremely safe returns that blow the returns of bonds away. And the bond market really churns the entire world economy. It has ever since the late 1700s. Okay. So this is why stablecoins are being attacked, because they're going to crush stablecoin staking. BlockFi earlier this year, they announced that they were dropping their rates of returns on stablecoin staking. People are like, why would they do that? Because they had to. They were made to. And Celsius will have to go through the same thing. Celsius will be, we work with Celsius. We love Celsius. I love Alex Mashinsky. You will still be able to stake Bitcoin, Ethereum, XRP, Tron, whatever you want to stake over there. But stablecoin staking returns are going to be reduced significantly, if not eliminated, over the next year.
Yeah, look, great call. And I do believe these regulators are in this kind of a weird scripted dance that we see, and it plays out. Yeah, and we see it in a lot of things. I mean, a lot of times when the U.S. is threatening the North Korea and Iran, there's also another deal going on in the background. And so it's like I shout a lot and then I get what I want. And you can just imagine Gary's phone blowing up by the top 10 banks saying, can you stop these damn stablecoins? They're going to crush our business here. I mean, they're literally sucking all of our returns out. And this is the worst thing that can happen to us. Let them have their Bitcoin, because that thing is just, you know, up and down. But this is a real threat to us. So you can see that happening. I mean, I worked in fixed income markets for many years. When people used to say, oh, you used to work on Wall Street, they said, were you a stockbroker? I said, no, I traded, you know, fixed income derivatives and treasury bonds. And this is the heartbeat of the entire economy. It's what everyone watches. It's the numbers. It's how they control monetary policy and inflation. And if you start to take away deposits and the basic lifeblood of the banking industry, it's a real threat. And stablecoins they're the gateway drug into crypto now. And it's a massive space. I had Stanley Kulichev here in studio last week, founder of Aave, incredible guy. I want to talk about him later. And it's the gateway drug. I mean, you can get people into this and they see the 4% yield if they can get it on Coinbase, no longer. We got Alex here of Celsius on next week. And again, they were promising those big returns. And yeah, those regulators are posturing now and trying to see what they can do. So yeah, it's a dance. I guess we're all going to have to watch and see what happens with regulation. Do you think they're going to try to clamp down and stop these yields from happening on stablecoins?
Yeah. Well, they are. Now, they're not going to come out and say it like that, but yeah, they are, and they will. That's coming. There's no way in the next 1 year, maybe optimistic timeline. You know, by the next bull market in 4 years, there will be no way that the returns on stablecoin staking will be close to what they are now. They may exist. It would be closer to 1%. Still a giant improvement over the 0.01% interest you're getting on your bank accounts, but not significant enough, like 4 to 6%, where people can, you know, be making massive amount of money doing that. So that's the goal. They want to eliminate those returns.
Yeah, and again, even if they have to intimidate to stop it from happening or take action, it's all kind of the same resistance of the central banking institutions. So to be continued. Again, I had Stanley in there, and I had Robert Leshner on of Compound the week before. They're both trying to build the next bridge between CeFi and DeFi and trying to get banks to take advantage of these stablecoin yields. And they're doing their best. We'll see if they are successful before they get shut down on the other side. And I guess the dance continues when it comes to that.
We call it AllFi.
Yeah, right. AllFi. Yeah, AllFi. Let me ask you about NFTs. I had Stanley here last week, and he said, Brian, I own 2,000 NFTs. I've never sold one. He sold his own. Actually, he created an NFT for like $1 million. It's a GIF of like his face and some balloons. And I said, Stanley, it's nice, but it's not that nice. And he went on to tell me about why he believes NFTs are the future. He said how he had an artist friend of his, and this is an interesting story, Ben, who had a painting on the wall that was this beautiful piece of modern art. And Stanley said, I want to buy the NFT of that. And the guy said, okay, I don't know why you want the NFT when you can have the art. And then a few weeks later, Stanley said, I actually think this is more valuable than that painting because I've got proof of ownership. I can show people. How many people come over to your house anyways? I can show them all online. And the artist started to think that maybe he was right. What's your call on these things? I think you've said it's got the wrong name because, you know, non-fungible tokens, it just means that it's non-fungible. It doesn't mean it's a JPEG or a piece of art. And yet that's what's in our brain.
90% of people have no idea what non-fungible mean, if not more.
Right. So,
yeah. I think the name's terrible. Nifties is kind of a word I've heard people say, but I'd want to see like maybe a phrase that leans more towards digital collectibles, but somehow has blockchain, you know, attachment to it. Because your average person, when they're trying to figure out what NFTs are, they're like, what a non-fungible token? What does that mean? It's too techie. It's too crypto nerd, in my opinion. So I'd like to see kind of a different name develop over the next, 1 to 2 years. I've had, celebrities have talked to me about the same thing. They've said, I'm trying to get into this, but I was so confused when I first got into it because I didn't understand what any of this means. So and to really understand fungible versus non-fungible, I mean, you really have to already understand Bitcoin and why it is fungible and why these other ones are not, why they're individualized tokens. So I would like to see some simplification on that. I think we will see more simplification of NFT platforms, but NFTs are definitely the future. We're just scratching the surface with NFTs right now. Art, collectibles, songs, eventually events, tickets, all this stuff will be NFTs, but there's even way bigger use cases for NFTs outside of that. If you start getting into, insurance or medical records or house deeds, there's all kinds of things that can become NFTs that make them instantly transferable on the blockchain, which makes things really easy, eliminates the need for, sometimes mortgage brokers, other middlemen and things like that. So, we think NFTs are going to be absolutely huge for sure. So we do want to see a simplification. But I think that when it comes to the conversation you were having, with Stanley and the idea of what's more valuable, well, I used to sell football helmets, signed football helmets. And, the thing is with a digital NFT or a digital autograph, you can never scratch the autograph off, right? We had some football helmets signed by Tom Brady that we smudged because you're taking it out of the box and you don't know where it is on the helmet necessarily, or you're putting it in a box, and just a little finger, move on top of one of those signatures sometimes will rub it off. And once you have a smudged signature, you have nothing. It's ruined, right? So when you look at digital autographs and digital signatures and collectibles, you can't lose those. They're forever, for literally forever. So when you look at, there's another story that's similar to the one you were explaining about the art piece, to where recently a YouTuber traded his actual Tesla Roadster in for an NFT of a Tesla Roadster, right? I think it was around $100,000, whatever it was. And he said, I got by far the better end of the deal. Well, you know what? The engine don't go out on a Tesla Roadster NFT, but eventually the actual engine on a vehicle goes out. Eventually, that thing will be sitting in a junkyard while the collectible will still be on a blockchain. I know that's a really, long-term way to look at it, but it is true, that there is powerful to digital collectibles. And we are going through a transition right now where people are finally starting to understand that the digital is the future, and ownership does not have to be tangible. I can put my hands around it ownership.
Yeah, it's a great point. And I think we all saw ourselves go digital in the last 18 months, because of the lockdown and everything. So our digital identities became a lot of the ways we interact with people. If you talk to my daughter, she's 17, her digital identity is maybe more important than her physical identity. Whereas when you and I grew up, we all needed a car to go hang out with the friends, and, the digital came later. These days, you could buy a piece of modern art, you could stick it in your house. How many people are going to come to your house this year? 20? Or you can stick it on Twitter and show that you own a CryptoPunk, and you got the clickable check thing on Ethereum, and you can show off, you can flex, you can be in the high end of the monkey social order, which is all what we're trying to do here anyways. So you could start to see how this is important, and it's real. It's 14% of the market, I think, now at $28 billion. I mean, it's big, and it's going to be bigger, and we can't even conceive of some of the uses, right? In the metaverse, and I mean, we're just getting started. It's almost like the email that was the internet, the NFTs now. It's a JPEG now, but it's going to be some 5-dimensional thing in the future, right?
Well, we're going through a total fundamental change in the world right now. Pandemic certainly sped that up. You're looking at digital ownership and digital identities being more important than real and tangible ones. I believe that 100%. Merchandising is also going through a shift. We're going to see where, a digital poster is more sought out than an actual poster you find in the little poster bin at Walmart. And so, I agree with you 100%. This is the new way. It's so much easier to sell digital products than real tangible products. There's no shipping. There are some gas fees, so we're still trying to work around, but I definitely agree with that 100%. NFTs are the future, and people that don't see that, they're just not looking hard enough.
Yeah, it's exciting. So they should get up the coin. I promised to buy an NFT in the next 7 days, so I'll keep you posted.
Buy a Pluto Alliance NFT.
Yeah.
That's our project. One of our NFT projects, Pluto Alliance.
All right, send me a link.
We'll give you one. You send me an ETH address, and we will send you a Pluto Alliance.
All right, there we go. I think you just hooked me in. All right, I love it. Thank you, Ben. I appreciate that. Talk to me about Cardano. You have been talking about Cardano for a long time now. They launched, obviously, their smart contract, I think, in the last couple of weeks. I asked point blank, my last 5 or 6 guests on this show. Everybody from Sandeep, co-founder of Polygon, to Stanny when he was in studio, Dan Moorhead running $3 billion of capital at Pantera, Anthony Scaramucci, the mooch with $1 billion of Bitcoin, and a few other big influencers. And I said, will Cardano replace Ethereum? And they all said, no chance. But I'm a big fan of what Charles Hoskinson is going to do. He's going to be on the show in a few weeks. I love his vision. I love everything he stands for. But a lot of people that have been in the market for a while are kind of in this, you've been talking about it a long time. Show me, don't tell me. We don't see the developers. We don't see everything. Tell me, what do you think about the future of Cardano?
Well, let's go over those people that you just said. Sandeep from Polygon, built on Ethereum.
Yeah.
Aave, DeFi project, built on Ethereum. Pantera, where's one of their biggest investments? Ethereum. So when you start going over the list, of course, oh no, there's no chance. There's no chance. For us to sit here and say there is no chance that Cardano will pass Ethereum is extremely unrealistic. Now, I will say this though. When you look at Bitcoin versus Ethereum, most people believe that are hardcore crypto enthusiasts, not your Bitcoin maxis, believe that Ethereum one day will pass Bitcoin as the number one coin. And I believe that. I think by the end or by 2025, Ethereum will permanently pass Bitcoin in market cap. It just does more stuff and the potential is higher. Okay. But at this point, Ethereum is much closer percentage-wise to Bitcoin than anything else is to Ethereum. So Ethereum has a massive lead. But if we can all say, I guarantee you, if you ask Sandeep, and if you ask Stanny, and if you ask, Dan Moorhead, if you said, could Ethereum ever pass Bitcoin? They're all going to say yes, right? They're all going to say yes. If the first mover advantage of Bitcoin is not strong enough to be able to hold back other projects from passing it, then how are we going to say Ethereum is any different? Especially when Ethereum, now I love Ethereum. It's our number 2 holding. Bitcoin's our number 1 holding. Love Ethereum. I like Ethereum way more than Bitcoin. But, if you were to say, the potential of Ethereum is just so much higher, I think everybody can agree that that's the case. But eventually we could see the same thing with these other projects in Ethereum. Ethereum has massive problems. We were talking about the gas fees. I mentioned it a minute ago because the gas fees or NFTs are insane. Now, do I believe that Cardano is going to pass Ethereum? I will say no. Will it be competitive? And is there a chance? Absolutely. We haven't even seen this ecosystem. I believe within 3 months, this will be the second biggest ecosystem behind Ethereum. It's going to start catching up to it very quickly. And I've made this comparison before. When it comes to the NFL, right? I love football. I love the NFL. The way I look at Cardano and Ethereum is kind of like this, while Ethereum's having all these massive problems, it's trying to roll out ETH 2.0, which will be coming out, some say at the end of this year. I think it'll be a couple of years where it fully rolls out. But, it's kind of like the Chiefs, right? They got Patrick Mahomes. He's a great quarterback. Everybody loves Patrick Mahomes. They lost last week, whatever. But a lot of people think they're going to go back to the Super Bowl. Well, if you're in their division, if you're like the Raiders or the Broncos or the Chiefs, Ethereum is like Patrick Mahomes. It's hurt right now. Patrick Mahomes gets hurt for 5 or 6 games. What is that going to do to the Chiefs season? It's going to cause it to be a little bit harder for them to get that number 1 seed. But what needs to happen is all the other teams in that division, they have to pounce on the Chiefs while they're down and they're not playing optimally. Until ETH 2.0 rolls out, Cardano, Solana, Tezos, all these other platforms, they have to pounce on Ethereum and they have to start making serious headway against it while it's having these problems. Because if ETH 2.0 rolls out and it's seamless and it's flawless and it solves all the major problems, then nothing will ever catch it. But if ETH 2.0 rolls out and we still are having even somewhat congestion problems and somewhat scalability problems, Cardano or Solana or any of these other projects, they have to position themselves to be right there to pounce on that. And, I think that is definitely something we can see. I don't think Solana will compete. I think Cardano is the smart contract platform of the future. I've said that for a long time. They rolled out the smart contracts. We're still just seeing what they can do and seeing what kind of projects can roll out on there. So can it happen? Yes. If I were to put a percentage on it, what would I say? Maybe 10 to 15%. But I do believe it's the strongest chance of anything to pass Ethereum.
And again, some of those big Ethereum fans that I asked about ETH 2.0, they kind of smiled and said, we're years away. And these are people that are all in on this ecosystem. Their future is the ecosystem. So even if they're being objective, it's hard to be objective because they're built on these ecosystems. And they said it's going to be a while. And like you said, right now, I mean, that's actually the biggest thing my students complain about is the gas.
Well, it makes it hard for smaller traders. Your newer person to crypto, it really handcuffs them on what they can do.
Yeah, it's actually one of the worst things when you come to the market because you see that and you're like, but I see all the promising things of DeFi and then the gas hits me. And as a smaller investor, it hits hard. So, all right, I see what you're saying and I respect what you're saying about Cardano. Solana slipped in here and looked like it started eating some of Cardano's lunch for them by providing these super fast solutions, some great potential for NFT. I actually just realized about a month ago that it stands for Solana Beach, which is basically where I'm from in San Diego, but they haven't airdropped me any coins, but that's okay. What do you think about Solana? Is it eating some of Cardano's lunch that we didn't think it would by taking some market share as a layer one solution? And is there anything else on the horizon like Tezos or some of these other things that might do the same?
Yeah. So let's see, where do I want to start with that? I'll start with Solana. I don't think Solana will catch Cardano. I don't think Solana from the tech perspective has been eating Cardano's lunch. I think that's laughable. Here's what happened.
Taking market share. It's taking market share potentially.
It has taken market share, but it's not based on anything Solana is doing. Okay. That they launched their NFT platform, which was really big. And the mutant apes over there, they did phenomenal. Here's why Solana pumped. Institutions started buying it. That's it. There's nothing more to it than that. We reported on a story that suddenly Solana had become the number one target for institutional investment. It passed Cardano, right?
Wow.
What was previous to that, number one, Cardano hasn't been Ethereum since much earlier this year. So what did we see? We saw Cardano go on a massive pump when the institutions started buying. We saw Solana go on a massive run as soon as that started happening. It like 3x in a short period of time after the institutions started putting money in. And by institutions, financial cartel. This is who these people are. The big funds, your BlackRocks, your Fidelities, your HSBCs, these companies, your Andreessen Horowitzes, which we'll get to in a second, these companies are driving the market. Now, why all of a sudden are they putting money into Cardano and into Solana instead of into Ethereum? Well, they've realized at this point they can't control Ethereum. They can buy enough. Over half of the top 100 Bitcoin wallets were created since 2019. You know what that means? That means all institutions. Institutions are the only people with enough money with Bitcoin above $10,000 to buy one of the biggest Bitcoin wallets. They're the only ones. When you look at Cardano and Solana, you're looking at prices that are so low with such big circulating supplies out there. Now, Cardano does have a lot staked, but where they're able to buy right now for control, they missed out on Ethereum. The institutions missed out on Ethereum. They have found it has been so hard to get early Ethereum holders to sell their Ethereum. They have not been able to accumulate it at the same rate. So what you're seeing with Cardano and what you're seeing with Solana is the institutions injecting that control and trying to make sure that those two projects do not run away from them before they have enough time to accumulate as much as they want. Of course, Solana, very, tied at the hip with Sam Bankman-Fried, who's in charge of Alameda Research, who's behind FTX, which is kind of the chosen exchange of the financial cartel right there after Coinbase. Basically what they want to do is they want to have, Coinbase's digital currency group, which is certainly, owned by, not completely owned by, but digital currency group, of course, was basically funded originally by Li Ka-shing and Hong Kong, China. So it's a lot of control in there. But when you look at Solana and when you look at FTX, like FTX is right there in the same vein, digital currency group, Coinbase Ventures, they're all behind a lot of the money that was raised in a big FTX raise, which, like I said, is tied at the hip to Solana. So we're seeing a lot of institutional control come to these two projects. Now, what project could be next for a Solana type run? Well, I got some projects I really like. Elron, Cosmos. Cosmos is one that we've already seen have a big run.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.